Hello, welcome to another edition of Money Ideas. As you can see, I'm still recovering a little bit from a cold, but I was never going to let that take away from sharing some of the biggest highlights in terms of charts over the last 7 days, from bond vigilantes in New York all the way to a boom in Rio. We had all kinds of economic data, including the US consumer, but one thing that stood out to me was what happened in the bond market, specifically US Treasuries. Wow, what a spike, and it was unleashed by commentary far away on the other side of the world. This is from the Bank of Japan governor, Kazuo Ueda, and he basically indicated that the Bank of Japan could increase interest rates at the end of the month. Now, you're going to say, well, big deal. Yes, it's a big deal, because if rates go up in Japan, that could entice and bring back a lot of the capital from the US. So think pressure on US government bonds in terms of downside pressure, and then also potential downside pressure on stocks, and a stronger yen and rising Japanese bond yields go into the equation as well. Yields ripping higher. Let's zoom in on that chart from 4.3% to 4.58 in 72 hours. This is not some kind of sort of small penny stock, right? So US government bonds and the 10-year in particular, for it to move that much in such a short amount of time, that is massive. The folks at the BlackRock Investment Institute have also chipped in here, and they're saying that as a result of everything that is happening, they are turning bearish on long-term US government bonds. Basically, this wave of AI-related financing is going to put more pressure on borrowing costs. And that's going to create more issues with how you're going to finance the debt, which is at record highs of $38 trillion. In terms of real-world impact, we're looking at implications, of course, for everything, because everything is priced off of US 10-year yields. So that includes auto loans, includes mortgages. It includes also what happens in the Gulf, because the currency, be it the Saudi Riyal or the United Arab Emirates dirham, they're both pegged to the US dollar. So whatever happens with the Fed and interest rates percolates through to the region as well. So the cost of capital goes up for every business when something happens with this benchmark. That's why it is so important. This is the time of the year when quite a few institutions come out with their forecasts and ideas for 2026. And one that really caught my attention, and I don't think gets talked about enough, is basically what is going on with emerging markets. Bank of America put out this research piece, and they're making the argument for allocating more into emerging markets. And their thinking is that a weaker dollar is going to be a bit of a tailwind, and also some of the technical factors when you look at the charts. The MSCI Emerging Market Index so far this year is up about 27%. That's quite a clip. And you compare that to some of the individual components, right? So not every emerging market performed that way. So for example, India has been a bit of a laggard, just up 2.5% in US dollar terms this year, which is a bit below last year's peak. Lombard Odier thinks that might be an opportunity. They're seeing earnings growth accelerate by 15%. And the valuation tailwinds may fade. They prefer India and South Korea, and also upside in China and in Brazil. Look, I also take issue with the term emerging markets, right? So capital markets in general tend to move very rapidly. They are great at revising and reviewing and sort of making progress. So why haven't we made progress with the term emerging markets? Something that no longer reflects properly all of the constituents, right? So countries like China and the United Arab Emirates, why are they emerging markets? I mean, they have fully emerged, they're fully integrated. I get that MSCI and JP Morgan, for example, they have very specific sort of checklists they go through on governance and liquidity and all kinds of sort of items. But at the end of the day, even with those checklists, a lot of progress have been made, and the term emerging markets just needs to, we need to come up with something new. I don't have any particular suggestions, but in any case, EM high on the list for 2026. I'd love to know from you whether you're allocating into emerging markets as well. Drop a comment below. The last bit of data I want to pin on the board is the Purchasing Managers Index, the PMI. And this is basically done through a group of people who go around, they do the surveys, and they try and shed more light on what is happening across supply chains, right? Upstream and downstream. And normally we look at PMIs out of China, for example, or out of the United States, real heavyweights of the global economy. This time around, I'm going to be looking at PMIs out of Saudi Arabia and the Eurozone. So as a reminder, anything above 50 for the PMI is an expansion. Anything below 50 is a contraction. And let's start off then with Saudi Arabia's non-oil economy that maintained strong growth momentum, output rising at the fastest pace in 10 months. I just got back from Riyadh. I can definitely attest to that. Even though the headline PMI number dropped and eased a little bit to 58.5. You contrast that with what is happening in the Eurozone, manufacturing activity slipping into contraction on weakening demand, and it's forcing firms to cut jobs at the fastest pace in 7 months. And this is the HCOB Eurozone Index, and it basically fell to 49.6 in the month of November. Europe is firmly in contraction then, and Saudi Arabia, by contrast, is still very much booming. And what I find particularly fascinating is that the oil price, Brent crude, is hardly at a favorable level for the Saudis at just above $60 a barrel. So the fact that the Saudi economy can still very much function for now with that kind of oil price is definitely something that's going to lead into a wider discussion going into 2026 about how they manage their debt commitments and their growth targets as well. So the question also becomes, how do you invest around that? Do you basically bet on countries that have that kind of momentum and that kind of direction? Or do you try and sort of find undervalued defensive plays in sort of strongholds of Germany or, for example, France? That is something we're going to explore together over the next few weeks. And that's all we have for this edition of Money Ideas, the charts that truly matter. And as always, I'd love to hear from you which charts you would like us to feature. Just drop a comment below and make sure you hit the subscribe button to stay up to date with the latest charts as and when they're published. See you next time.